Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Welcome. I hope you did okay without me yesterday. Another Monday in a row. Why is it I start doing this? I'm telling you, they're doing it because of me. I start doing this, taking Mondays off thing, and we get two big moves on Monday. I don't know, but here's the thing. We'll talk about it. We got a lot to say about the bonds, but first let's go to the charts. Oil yesterday having a pretty good move up and coming back, but we always start here. Okay, ES. So ES yesterday was kind of a mixed day, but here in the overnight session we do appear to be recovering it, and so far things look fairly risk on. That could a little high probability of that changing throughout the day though, right? And yesterday here you can see the treasuries just getting absolutely slaughtered. Want to point out that the 2 and 10-year spread actually steepened a little bit yesterday. So you're hearing a lot of talk about the yield curve flattening. Well, I think a lot of that is wishful thinking here because they are steepening a little bit. They steepened on the far end of the curve? No, they did not. They actually flattened a little bit in the 10 and 30. All right. We already looked at oil. Natural gas doing fine. Gold had a little bit of a move up yesterday, but it has already come back, kind of taken off. I'm sorry, my microphone is probably pop filter is not working very well. I'm just noticing there's a little rip in the foam somehow. Anyways, last thing we gotta come over here, look at the currencies, so you can see the dollar making the move. Yesterday, almost touched 99, but now reversing very, very quickly. I don't know why the chart is like that. It should be like that, but I digress. And here is Bitcoin. So, wait, is that right? It is the 22nd. That chart doesn't look right though, because yesterday we had on the 21st there was a little bit of a pullback, and now here today it looks like they're extending it again. Check. It's not rollover yet, is it? Nope. Okay. They're still pretty close to the 40K level, but I'm not really seeing signs of pressure in Bitcoin, especially since we're not really seeing signs of pressure in the equities right now, right? And Bitcoin has very much been following what equities are doing. Okay, so here in the treasuries, here's the thing about the treasuries. Well, maybe I should wait a little bit before I get too much into it. We're still pretty low on viewers. So I think everybody will get in here soon. I got a lot done yesterday, I feel. I did some research. Got a lot of work done on understanding the machine learning side of the industry. Haven't gotten to coding anything super practical yet, but I think we will get in there. Okay, so News Squawk says May FOMC 50 basis point hike priced at 70% chance, and the December FOMC rate priced at 2.25% Bullard on deck. So here's the thing. When I go and I look at the comments from yesterday, I don't see anything changed. Market freaking out here. Bonds getting absolutely killed. I didn't hear Powell say anything that he didn't say at the Federal Reserve meeting. Should the possibility of a 50 basis point hike be higher. I don't know. Like the thing is he said when they asked him about it at the FOMC, he said, "Well, we'll do it. It's possible." They're giving themselves maximum optionality is really what this all comes down to, right? Maximum optionality. I I don't think that they've said anything about like what would be the metrics that would cause them to want to do a 50 basis point hike. I don't know how they sort that out. I don't think that the market entirely knows. So I think they're just kind of guessing about what the Federal Reserve is going to want to do. But I know I'm seeing a lot of people saying that they'll do a 50 basis point hike in May and they'll do a 50 basis point hike in June. And I'm sitting here like, well, what again, what would it take for them to do that? I don't know. And so I'm kind of left feeling here that this move that we had down could be crazy overextended. Like a massive overreaction. Mm. Scott Adams tweets, let's all agree that the new world order means whatever makes the debate most toxic. I love it. Like you're about 2.35. Like yesterday we were at like 2.2. It was like another 10 basis points rise. I don't know. Just remember, there's the mistake you're going to see people make here. They think that markets are informationally efficient. Well, if the treasuries are pricing this now, then it must be a real thing. And it's not like that. It's not like that. Let's see here. So I got a couple things on my mind. I keep looking at I usually have this hood on my camera to protect it from the lights, even though I don't think that it's actually hitting the lights, but I'm going to put it back on anyways. Let's see here. Oh, we do have some news this morning. I thought, oh, it's just Canadian numbers. That's why. There we go. That's a little bit better. I feel like the grading is a little bit off on our thing. Remember we changed it, and now when I look at it, I'm like, that could be a little bit better. Oh, do I not even have the filter on? I must. Oh, there we go. I do have it on. Gamma could maybe be up a 1%. It's fine. Okay, so there's the Canadian numbers. I'm real tempted to chase this. Well, I think I'm going to try and make a more... I may have to get myself in the queue here. Like, I'm thinking... Well, okay, wait. They were saying Bullard was on deck, right? Let's double check here. Is there somebody speaking today? Williams. I have Williams and Mester. Richmond Manufacturing Index. Williams. Goldman Sachs was out with a note late yesterday calling for the Fed to raise rates 50 basis points in both May and June, followed by 25 basis point hikes at the 4 remaining meetings in the second half of 2022 and 3 quarterly hikes in 2023, with hiking to continue until 3 to 3.25%. I don't know why they were saying that, because I don't see anything about him speaking today. Because I'm with you on that one. It's like, well, if Bullard is going to speak today, I don't necessarily want to go go long bonds, right? Oh, he is talking. He is on an interview. He is in an interview on Bloomberg TV. So I tell you what, I'm just gonna sit it out until they're done, until he's done, because I really hate gambling on live speeches. And that's kind of the thing is I look at yesterday and I'm like, well, wow, I missed a really big move. But then I'm like, yeah, but if I was actively trading it, would I have actually taken a trade on it? I'm not so sure. I'm not so sure because it was during live speeches and those tend to be bad for me. Unless I'm like already in a good position. The efficient market hype on Twitter posted a little gif here of like an airplane coming and soldiers running into the building away from it. It was one saying Bullard speaking now. Okay. He thinks that 50 basis point moves are definitely in the mix, quote unquote. If it's necessary. So tell me, what kind of data would make a 50 basis point move, quote unquote, necessary? This is the thing that I don't understand. You know, I could go and watch it. Maybe I will go watch it. Because I have a Bloomberg subscription. Web subscription, at least. Bloomberg anywhere, remote win, remote login. Oh, am I not in? I'm not signed in. Okay, let's sign in. Oh, you know what happened is I ran CCleaner. And it deleted all of my cookies. There we go. And I don't see the live TV. Where's the live TV? Bloomberg TV. Watch Live US. Hmm. Well, this is interesting. So he's just saying here he wants to get back to neutral, and his neutral is 2% because he has a lower R star. So he's trying to give everybody the nuance and tell us where he's coming from. But what he's saying though, if they did the double hike, it would be 2 double hikes and then another quarter basis point hike after that, and then he would say no more hikes. But it would be done before the end of this year. Oh, and he reinforces that by saying, 2023 would be way too long for this policy process, and we can't wait for that. Hmm. He says one of the best labor markets in a generation. I actually don't think the labor market is as good as some of the metrics suggest. I think that there's a lot of like job openings out there, but I think that it's because there has been a change in the way that companies go about hiring on the job market, and that they really try and hire out for the talent and are um very particular about it, and so they don't fill those jobs. But if you're out there looking, I don't think that it's as easy for those people as kind of suggests. Okay, so Bullard is done there. I think that he just really well described his position. Okay, somebody just hit pretty big into 35.5 there. We'll see. I Yeah. Oh, by the way, at the very end of that, he was saying they asked, "Do you think that you'll get a soft landing?" He said, "I think so." Yeah. Bitfinex tweets, "Crypto. We need crypto because governments print money and inflate prices. Also, crypto. Let's print fake money to inflate crypto prices." Yeah. Well, looks like I missed the boat. I didn't get filled. It was a good click. I'm happy with my click, but I wish I'd gotten filled. Oh, sorry, we gotta come back over here. You can't even see. You don't even know, guys. He Bullard's um position is interesting, but I think well thought out and numbers backed, and I kind of feel like that when you get the headlines, you just get this thing that Bullard is like a bull in a china shop sort of a thing. But I really don't see that. I think that he's making a good point. I'm glad he's on the board providing that perspective, and that he's willing to dissent when he feels it's necessary. But the thing that I'm not getting from the central bank policymakers is what is it that necessitates a 50 basis point hike versus a quarter basis point hike? I think that from Bullard's perspective, He just prefers 50 basis point hikes just because he thinks that we need to get back to a neutral rate, and he believes the neutral rate is 2%. He thinks that we need to get to that neutral rate as quickly as possible. So, for him, he is basically all in on 50 basis point hikes as quickly as possible until we get back to neutral, unless there is some sort of concerning sign about inflation coming, right? So he's pretty much all in. What would it take from the other ones though? Would it, if they're giving themselves maximum optionality and all that sort of stuff, you know? Well, Treasury's relatively quiet now after all that. S&P 500, maybe a little bit of upside momentum here. Gold's in the middle of the recovery range after the little bit of downside movement that they had earlier. That seemed to correlate well with the treasuries. One has to wonder if we do get a bull run in the treasuries, and is kind of hinting that maybe it could happen. So maybe gold could come back. Yeah, Bullard largely reiterated his prior hawkish sentiment from Friday with no big surprises in there, says News Squawk, and I agree with them. Okay. Well, I'm not going to catch this. I just lost 10 points there trying to wait for a fill. Totally had the right idea, though, when that guy hit 172 into 2.355 in the micros. I was like, yeah, that's too much. And sure enough, treasuries came back to that other end of the range. They could come up here and we could get a lean. I'm kind of noticing the treasuries have a little bit more of a tendency to mean revert. That kind of was happening to us on Friday. Another tick up. Probably they tick 123 as well. No, my monitor is too high. I moved it for a video that I recorded over the weekend, and I'm now realizing that the monitor is too high. So where I want to look is like way up here. Okay, that's a good move there, though. Financial Times says the Ukraine war is not about democracy versus autocracy. I don't know, man. When I think about the Ukraine war, I kind of almost hesitate to say what I think I feel. Not because it's like controversial and you'll get canceled or anything like that, but just because I feel like it's almost alarmist. Well, I guess now that I said that, I have to say something, huh? No, you look at what's going on in Mariupol is like just absolutely terrifying to me. They're literally just bombing the hell out of that city. Anybody, civilians that are still in there are just getting destroyed. They're literally leveling the city, right? And then my understanding is that Russia is setting up like camps and planning on getting rid of everybody that was supported the old government and all of these sorts of things. Like, looks like a genocide to me. It looks like a genocide to me is what I think's going on in Ukraine. Am I wrong? And I just kind of feel like we're just gonna sit and watch it happen. I guess I always feel like that because this is the same thing with the Uyghurs in China, right? They're committing genocide. So when I was looking at them at 123, I was like, well, they're definitely gonna hit into that, but they pushed through quite well here. I haven't seen any kind of sign of like the book being stressed yet. The up movement looks pretty healthy. I haven't seen like reloading on the bid yet. That might happen. Octavia says you're right. I don't want to be that. Being right is not as much fun as my younger self imagined it would be. You know, it was all about being right, and I guess I'm still all about being right. But I don't really take pleasure when I'm right. It's just kind of like, oh yeah, see, I told you guys. You know, it's like that. Well, the last big swing high above us from overnight and basically where we would be getting into like the gap from the close yesterday. Although it kind of depends on where you consider that to be at, but somewhere around 123.050, maybe an upside target that we might want to pay attention to a little bit. But can I put an order out here? I don't know about that. Okay, so they did hit into O2 and a decent amount traded there still. So I think that there's maybe someone still buying there. Does look like the 5-year has kind of been the one driving it. So, okay, so when you say ish, a ZNZT trade seems working well, are you saying that you are doing some sort of a spread, or are you just saying that they're kind of moving pretty well together? I would say that ZTZ or ZT. Sorry, you're talking about the 2-year. You're talking about the 2-year. Yeah. So did you trade it on its steepening? Did you trade the steepener? Because it did steepen quite a bit overnight, didn't it? Well, it steepened quite a bit yesterday in general. You know, so here's the thing: is that when we come in, we look at the market. If you watch, say, Zero Hedge, okay, and see what they say. They say, the yield curve is flattening. This is because the market is predicting that the Federal Reserve is going to have to lower rates almost as soon as they're done raising them, right? And you come and you look at the market and they're like, that's what the market's pricing in. And okay, a couple of things about that, because I think that is a very overly simplistic analysis that doesn't really serve you guys well. Okay, this is where we get our advantage, guys. We understand the nuance of this. We understand that the market is not efficient, and we can understand when the orders are just kind of being silly. In this particular case, I kind of think that yesterday that a lot of the movement was probably just robots trading off of, machine learning algorithms trying to understand what he said, that sort of a thing. Trying to say that that move is a perfect indication of all available information and the market pricing that in is, I just think, patently ridiculous. And we've proven that that's not the case mathematically. So, whatever. I get it. I would have been prone to have made that same analysis many years ago. Okay. But here's how I would approach it. Okay. There's multiple scenarios here. Okay. One scenario is that the Federal Reserve raise rates to a neutral rate, which is around 2% to 2.5%, 2.25%, something like that. Okay. And then they stop and we get a soft landing and the economy is fine. That is like, and if that's the Federal Reserve's base case scenario, I kind of really have to wonder why anybody would have a different base case scenario. But that's the Federal Reserve's base case scenario. Now, the other scenario that you have is the doomsday scenario, which is that the Federal Reserve raises rates too quickly and it causes a recession and they immediately have to lower rates back down again. Okay. But I think that there's a third scenario that is actually probably more likely and is kind of closer to the first one. But the third scenario is this. The Russian invasion of Ukraine and increasing tension between the United States and China is leading to a reversal of decades-long globalization. Countries are becoming more protective and are just learning or deciding that they need to have more local industry to protect their supply chains against geopolitical volatility. As such, many of the generational level deflationary pressures that have led to such low rates for, over a decade now are reversing. And as such, the yield curve is eventually going to have to move to reflect that, which means that the yield premium that you get right now from holding for a 10 and maybe even for holding for a 30-year is too low. I think that the 10 and the 30 should move down together. Doesn't it usually take a year to see the full effect of raising or lowering rates? I don't know the exact metrics, but my understanding is that yes, it does take some time to see the full impact of them. Okay, so I would just want to note that we did kind of mean revert here back to 123, and there was not very much liquidity behind us, unfortunately. We could see another leg of this meta order, though. I think that what you saw there had to have been some kind of meta order. That might also mean, well, I don't know. It's possible that, hey, we just bust out the top year now because they just had another uptick or two, but probably is more likely that they settle around a 1/2. Let's just see. Those orders are definitely pulling in front of it. Anyways, in this scenario, like the correct trade, I think in that scenario is to short the 10 and the 30. Because here it's like, okay, but well, rates are going to continue to rise, but you'll actually see a steepener. You actually see a steepener, and it's better to go in on the 10 and the 30. Maybe the 10, because there's kind of a big question about, is that something that's going to last 30 years? So it's definitely something that would last 10 years, but maybe not 30 years. So you might see the spread between the 10 and the 30 could remain relatively low, but the spread between the 2 and the 10 increase, right? That's a serious scenario that I don't think that the markets are really thinking about too much, but is one that could really be instrumental in the future. Is that, hey, some of those deflationary pressures are going to be gone, or possibly be gone. It depends on how this Ukraine thing shakes out. But if the Ukraine thing continues to shake out the way that it has, that's what the end result is going to be, is that there's going to be more long-term inflation pressures as a result. Things are going to get more expensive as people have to readjust their supply chains. Okay, so they did kind of stop at 0.5, but then they reverted back down to 123 and are kind of saying, no, the support's not there yet. Still looks pretty free to move around, though. Like, the liquidity is not really firming up around the price here, like it should. The fundamentals does not work during Treasury day trade. I sim trade and I find the pairs trade direction first. Well, okay, so you're right on that ish, right? Fundamentals. So remember, I said the current market price does not accurately reflect all available information. If that is the case, it could well be, you can say at the same time, treasuries are oversold, but also that you shouldn't use fundamentals to trade, right? Both of those things are true at that point, right? So what does move the market? Orders move the markets. Is that simple. And which way are the orders coming in? You know, that's really what it all comes down to. Well, I tell you what, the liquidity don't look so hot. Falling below 123 and basically coming all the way back on that bull move. Seeing quite a bit of selling over here on the 30-year portion of it as well. Who is actually moving the bond market? Well, I don't know their names. Does anybody know their names? Who are the traders over at these you know, whoever it is that's submitting the orders, right? Somebody bought, how much was it? Somebody bought some 5,000 or so treasury contracts there. It's Uzi. Somebody bought 5,000. I don't know who. I really don't know who are the big players. I don't necessarily know. I mean, we can put it down into different categories, right? There's sovereign wealth funds, there's hedge funds, there's banks. Banks have a big impact there because they, you know, use those products for collateral, right? That's kind of a one that has an interesting dynamic that we don't think about as often, but is important to keep in mind is that the banks are buyers of treasuries by necessity as used for collateral, right? They're one of the primary buyers. They're the ones that, you know, with the Federal Reserve doing all of this stuff and everything, how can bonds be so high? You know, back when we were in, you know, well, like in the quantitative easing days, how can it be so high? Who would buy this stuff? Oh, well, the banks do. The banks have to buy it, and they're competing with the Federal Reserve to buy it now. Right? So that's one. CTAs. So big force that you're seeing right now, and I think one of the reasons why there might be a little bit of a tendency to mean revert a little bit today is those CTAs, because the CTAs are like overwhelmingly short now after yesterday, right? In Forex, they say banks are and Forex is almost completely dominated by the banks, right? Because like that's really what the market is trading is it's just a derivative of what the banks are doing interdesk. So when we had that move, yes, we did. Was that as we had that move up in the treasuries, you saw a little bit of a move up in the S&P 500. But the other assets, like, well, the 6J definitely moved up. 6J kind of looks to me like it could go for another leg. And The treasuries maybe could too, but we'll see. Obviously, the liquidity here in the treasury isn't very good. Um, Oil taking a little bit of a dive here. The one that I think is going to be the most interesting is to come in at the end of this month and see what the foreign holdings of treasuries have changed. I wouldn't be surprised to come in and find that China was selling again. I gotcha. I gotcha. So there's like these sovereign wealth funds. They're a really big player in there, right? I guess so now that I kind of understand more your question, um another really big contingent, a really big contingent here are like uh funds from Japan, right? Like what do we call these pension plans? Pension plans from Japan. They don't make any money from buying their own debt, so they come over and they buy the US debt. And that's why Japan ends up being like the largest holder of US treasuries now. That may have changed, but for a while it was China, and then recently China sold enough that it Japan became number one again. That may have may oscillate back and forth. We'll see. By the way, on that move down, a little bit of flattening there on the 510, huh? Overall, my graphs don't show too huge of a move in the spreads, but I bet that we get a lot of spread trading today, yeah? You're starting to pay more attention? Well, okay, so they made a pretty ugly little push there at 30, half, and 30, and again, there wasn't much liquidity holding it. I don't know. I don't think we really saw the Japanese yen move there off of that. Let's like reset that so that we can kind of track what they're doing there. We're gonna get some ECB speakers soon. Well, there's 35.5. Do I still want it? Well, not now. I'm kind of thinking let's puke. I am really quite taken back by how much the liquidity just like evaporated underneath of us, That move that we had from a price action perspective is not really like a significant breakout or really gives you a whole lot of more information. But the way that that liquidity disappeared behind us is really concerning to me. Granted, there wasn't a whole lot of liquidity above us either when they moved up to the highs. But it kind of looks like there was a meta order there. He got filled at O2, and then when he was done, it was just like nobody was willing to support it, and they let it come all the way back. So there's definitely a lack of people. Market makers seem to be wary about putting bids, right? Hmm. Now you're actually getting a look kind of more of what I was expecting to see on the downside, where they kind of trade it back and forth and a little bit trades. But there you can see 2.5 that may have been the case, that you had big meta order up, and then as soon as that was got up to the highs, somebody else came in and started selling it down, because it is like range expansion, right? That must be what that was, is a competing meta order. Are they filling him here? That could be the end of that move, but of course there could be others come in and sell it after him, right? You don't see any big MBOs today. Well, you can't see any at the moment, that's for sure. There's no big orders anywhere on here. Isn't it curious? Yesterday, the liquidity actually looked okay. Now today, it looks like shit, right? Well, this is not looking so hot, so. Gonna have to take my licks. It was not a terrible entry. Obviously, we could have had a way better entry, and then maybe I would have just taken 20, but it wasn't the best management after that. Miguel Zapata. Hey, I remember you from like a long time ago. I remember your name just because there was I knew a guy, Zapata, and it means shoe, means female shoe in Spanish. I don't remember that. I don't know, man. Well, let's see how much of a bear excursion they can get. I'm a little skeptical about both of these movements now. Shoemaker, there you go. But I remember, I mean, maybe it was somebody else, but I remember you stopping by like a couple of years ago. See, that's pretty ugly right there. There's more to that meta order. Well, I don't want to try and sell it here. We're obviously way too late to try and sell it, right? Our chance to sell it would have been up here at 123. Oh, geez, look at that. Somebody's puking. Somebody puked hard at 26. So the question is, when I came in here, I was kind of looking for some mean reversion. We got a really good trade, and then that one kind of fizzled out and got replaced by an opposing meta order the other way, which has ended up being much, much stronger. So at this point, it kind of becomes hard for me to say, yeah, I want to buy today still. I mean, it's still a possibility that a buyer comes in and it flips all the way back up to the high here, but it seems like quite a bit less likely, right? But I can't buy these prices, right? There does appear to be a little bit of liquidity hole at 26, so we may come back. We'll see if what the liquidity is like at 27.5. The inverting yield curve doesn't scare me. So again, just going back to what I was saying earlier, first let's just acknowledge that the markets are not informationally efficient. The question about the yield curve is, what does it really show? And some people claim that it shows investors are predicting a recession. I don't think that that's the case. I think that it shows what the orders are doing. And people are selling the 5-year because the Federal Reserve is raising rates. It's that simple, right? And that's causing the yield curve to flatten. Doesn't necessarily mean that all of the orders in there think that there's going to be a recession. And the thing is then you got to come into, okay, well, why do we pay attention to this yield curve thing? Well, it has been one of, historically, the most effective predictors of a recession was when the 2 and the 10-year inverted for over a certain amount of time. But we just have a historical correlation, right? We don't 100% understand. We don't have enough information to understand completely why. For instance, there was a study, I think it was the Kansas City Fed. I could be wrong, but there was a study where they said, well, what happens when the 2 and 10-year yields invert is banks cut back on lending considerably, because when it inverts, they basically are losing money from they need a spread, and when the spread is negative, then they lose money. And so their argument was that the 2 and 10 causes a recession. Yeah, it causes. Their opinion is, their theory is that a 2 and 10-year spread causes a recession. That's not proven, but they have some compelling evidence to it, I think. Yeah, right. And so that's kind of where I say I think it really depends on which side you come down on. If you think that it's predicting a recession, then I would just ignore it. If you think it's predicting a recession, ignore it, because the market's not fundamentally efficient. The yield curve is so flat anyways that the move that we've had is just kind of like a little sneeze, and so it's not that significant of a move. Like you realize when the yield curve when the spread was like this, and then it comes all the way like back, that's hard to happen, that only happens for like really good reasons. Whereas when it was like this and now it's like this, it's like, well, whatever, you know what I mean? So if we think that they're pricing in something, then I don't think that that's as reliable of an indicator as everybody says it's going to be. But if it creates a recession, then we should be concerned, right? Yeah. And like the big the thing that I would cite as to kind of convince you of this view is that this is Janet Yellen's view. When they had press conference of her last Federal Reserve press conference before Powell took over, she straight up said, well, the way that the Treasury curve is right now means that it will be really easy for the yield curve to invert. And so it might not be as effective of a predictor as it has been in the past. And I think she has good reasons to say that. I don't think that the opinion that an inverted curve causes a recession because banks significantly cut back on lending is not really accepted in the financial world widely. Yeah. Well, the selling here is not really abating. We kind of thought there was a little bit of a hole there at 26, but now like the momentum has continued down. It's really kind of making me feel FOMO, right? Like, oh yeah, let's go long at 37, 2.37. But there could be a much steeper pullback. But here again, well, there is some corporate issuance going on. That is one thing that we've got, one dynamic that I'm told we've got going on today that would have been the sell side, but I don't know. When I saw that movement up, I kind of thought, wow, that must not be happening. Yeah, that's tough. The sell pressure sure is extreme, though, isn't it? Because if you had gotten filled there at 37, look, you'd already have 5 ticks. John says inversion is a result, not a cause. I hate it when you guys make these really confident statements and on things that like I know we can't prove, right? There's with the way that the science works, there's no way for us to conclusively prove that, right? Surely though, during this tightening cycle, we're going to learn a lot, right? We're going to learn a lot. If we do this tightening cycle and we have a soft landing and the market continues onward, despite the yield curve inverting, then I think that would be very compelling evidence that it doesn't create recessions, and that the degree of move in the curve matters more than it actually inverting in terms of predicting a recession, is what I would probably say, right? Whereas if it's the other way, I think everybody will take the opposite conclusion, but it won't exactly be proven per se. Because you could still argue that the recession was caused by other things other than the yield curve, right? But it would just, you get what I mean? This is the thing that's so weird about science, right? Is that it only takes one contrary example to disprove something. But you can have all of the confirming evidence in the world, and it might not prove that something is actually a thing. Especially when you're talking about a world where there's like a lot of randomness to what we're studying, right? We might need to consider the possibility that that's the low of the day in the treasury. But if that is the low of the day in the treasury, there will probably be a long grind as it comes back down and makes a higher low and all that sort of thing. It would be really unusual for that to just be another V bounce, you know? With the way that they flipped, with the way that they flipped it at the high. Jigsaw has a new blog. Nope. How big down was that? Was an 18 tick move down. Wow. After an 11 tick move down. That was like a really extreme and excessive move down in the treasury. Like really. It was really excessive. China investigation of crashed jet faces high level of difficulty. No clear assessment of the cause of the jet's crash. China Evergrande executive says it has 22.7 billion worth of outstanding offshore debt. Says it will further enhance communications with creditors to reach the end July target. They still seem to be pushing back at 27 there. Or crypto assets are being used to evade Russian sanctions. I don't think that it was anything that the European presidents said that caused that move, but it's possible that we missed something there. I didn't hear we didn't hear anything on the squawk or any of that. So they haven't talked about policy here, really. See, like Panetta said, higher market volatility can put banks under liquidity strain and has led us to revisit the pro-cyclicality of margins to examine its system-wide impact. Okay. See, it's like wonk stuff. So something that's kind of weird to me. I mean, I guess I did get out early before things really turned south on that trade. Yeah, I was at 36 when we bailed. Still, it seems like a really pretty extreme move over here in the main treasury, but yields didn't actually seem to move that much to me. What's with that? Is that just my perception? Because that just doesn't seem right. Yeah, look at that. That was a little bit of an aggressive take there at 27 and 27 half, only for it to flip back on it. Right? So now we're getting real fighting trade. Although that's not necessary. If I'm going to go long treasuries, that's not necessarily what I want to see. Ukrainian armed forces claim they have cut the Russian supply lines to Bucha, Irpin, and Hostomel near Kiev. Major development if confirmed, and if Ukrainian forces can hold their position. Phillips O'Brien, two big ifs. If Kiev is still the number one priority for the Russians, and if the below story is true, then this is by far the most important military development on the ground during the last few days. That inert Russian force to the northeast of Kiev could be in big trouble. Well, I don't know about this, guys. I'm still extremely torn on what would be the best direction to go. I suppose that I'm still a little biased towards going along the treasury here. I don't know if I like 27, just because that's like the high end of the distribution or liquidity hole, as we would call it. Could you take 37? That would have been an okay trade. I'm seeing some pretty strong impulse of buying coming into the 30-year. Yield curve is still kind of equalized. Well, the 5-year went down more, but after the pullback, and now they're kind of this last little leg up, they're kind of relatively equal. See, there's 27.5. If I really believed that we were gonna like see a trend down day or something like that, then this would be a place for me to potentially look for a trade, but I'm not convinced. Mm-hmm. See, like right there. If we could get 36, we could maybe get 36 to 37. But then you might want to reverse from there because maybe they're not able to get lower and it reverses really hard. And it seems like that the people selling were like really overly aggressive. Hmm. Yeah, there you go. Exactly what I was worried about. So there they just fell another 2 ticks and again on very light volume and very easily. The 6J did appear to fall back a little bit there for them as well. I'm not seeing like evidence necessarily of like another strong sell meta order swing. So I'm not so sure about trying to go long rates here. Looks like they might come back up to 27.5 almost as easily as they fell down. So again, I'm just kind of left thinking, wow, the liquidity is really terrible today. Test of the VWAP after the breakdown, that could happen too, yeah. I mean, this is the kind of the thinking that I was having here on like I'm not so sure if I would like to go long ZN here because the chances of them um flipping over the VWAP really hard down and then flipping over to the VWAP just as hard back up is that would be a pretty unusual move that only happens like 2 or 3 times a year or something like that. And we're kind of going on trading on not I like there's not really news or anything necessarily to be moving the treasuries the way that it is, right? I think that it's mostly just trade. Like there's big players making moves. Could be hard for me to sort out what moves they're really making right now because I don't have a headline to base it all off of. And especially since I expected the mean reversion to come in and that kind of failed. Mm, the more likely scenario, I think, is you come up to the VWAP and then retest the lows. USD JPY 121. What I see on the future is the opposite, so I can't. S&P 500 had a pretty strong open there, didn't it? Watching NQ swallow up liquidity is relaxing. I find that a little. Like they're trading quite a bit at 44.72. You know what? While we're kind of waiting here, I think I want to move my monitor down so I'm not thinking about that if I get in another trade, okay? Okay, that's a little bit better. China has placed all residents of Tangshan Hebei under lockdown. Hmm. Mm-mm-mm. Well, the long at 36 probably would have worked, but you're only getting 10th, so that's kind of why I wasn't playing that one. We could try reversing here, so for that you got this possibility of them pushing lower again, right? If they push lower again, then I'm really going to start to be like, what is going on? Maybe they could really be trading on this Goldman's call to have 250 basis point hikes. That could be one of the things going on. Liquidity's still not looking so hot. Gingrich calls Kamala Harris the dumbest person ever elected vice president. I mean, sometimes I kind of wonder why we have the vice president position. That way the ES is moving is making me a little uneasy. It just seems like so excessively bullish. Seems a little too bullish given the environment, you know? Lots of uncertainty. In case the president, yeah, but in case the president dies, do you really want Kamala Harris in charge? Has there ever been a situation where if the president died, you would be really happy about who became vice president? Because I haven't. the the vice president that seems to me to always be a loser, you know? That guy from the primary campaign that nobody liked, came in second and lost, and we're just kind of giving him a placeholder position of sorts, you know? And you could just elect, you could just make the leader of the Senate become the president and just not have a vice president, right? Well, that maybe wouldn't be a great way of doing things. Okay, well, so we have a really wide range here. It's a really wide range in the treasuries, man. It is volatile. I think that given the way that ES is trading, it's really hard for me to take to go long the treasury, right? Hmm. Like that was just another 10 points on nothing. It was easy. I'm hearing like, okay, 7 million residents under lockdown in Tangshan. That's not a good headline. Where's the good headlines? What's driving that action? Because I don't see it. Not that I see some sort of risk-off move coming. It's super hard to want to be looking for flight to safety havens right now with the way that it's trading rates. The volume through this range has been sell, so that does kind of suggest that like they made the liquidity hole, and that's why we're ranging in this area. Yeah, China was bragging about how fast they got out of lockdown in 2020. China's number one, the hubris wheel. Yeah, it's true. It's true. Did I tell you, speaking of hubris, remember I was talking the other day about how there was a Reddit troll that got into a really extended argument with me because he thinks that all you got to do is wait for an instrument to break significant daily or weekly support and then reverse it. That's his strategy. And he continues to reply to that thread and tells me everything that he's doing. So he took a trade in oil. I think that he did make money on that trade in oil, although since, that one's kind of just a mess and random anyways. Now he's got a long in gold. He thinks he's basically long from, well, I would say right about where it is right now, and he thinks that it will get back to 39.90 by the end of the week. And I'm just sitting here like, what kind of mentality do you have to be in to like start harassing somebody on Reddit over the course of several days? Like nobody is the reason I stopped responding in that thread is because I knew nobody was reading it anymore, right? This guy, he keeps responding to the thread. Like, what the heck? I just can't, and I'm a pretty arrogant person, and I just can't imagine being that arrogant, And the funny thing is I didn't tell him anything about who he was arguing with. I didn't be like, well, I run a, he was saying, you probably don't even trade this and that. I'm like, well, I mean, I'm sitting there thinking, well, I do kind of have a YouTube channel where you can see every trade that I've ever made, but I just didn't say, I didn't say anything. So every time he sends a message to me, I'm just kind of laughing about it. And he must be thinking like, oh, I'm totally messing with his head and all this sort of stuff. I'm just like, no, don't think of it that way. You got to be humble. Like, I ever realize that our ability to predict things is just like really limited, right? Like today is like a really good example. Like I had a setup, kind of worked out. Then something else came and short circuited it. And was there anything that I could have known that really would have told me it would have moved down the way that it does with any real probability? Well, the evidence that I have says no. Says no. Shenzhen is a major port. Okay. Reddit is basically where ego is born and the real world is where it dies. There you go, my friend. It's true. He has to be new or like a kid or something. I highly suspect that this guy is like a child. Like not even out of high school or something like that. Because I just can't imagine a grown that, or he's like a narcissist, right? So when you're not coding, you're debating foolish traders on Reddit. I probably spend more time on Reddit than I should, but it's not actually that much. In fact, it just becomes less and less and less because I just can't. Some of the degree of stupidity that I see from traders on Reddit, I just can't handle it, man. I just can't handle it. There's so many things that I was just like, this is so foolish. In a world of 40-year-old men pissing themselves over a new Buzz Lightyear movie, betting he's a child is a losing one. Maybe. I can't really put a finger on why I think he might be a kid. Is just kind of like the way he talks and everything. It kind of seems like somebody that's not very old. Maybe he's in his early 20s, but this isn't a guy that's been trading for like 10 years and has been battered by the markets over and over again. Nah. This is a guy that maybe he's been trading for 5 years, but has had success since the pandemic because of excessive risk taking, and is likely to lose it all in the next year or two. You know, everyone can trade, but not everyone is a trader. It's just, but I mean, think back to the origin of the argument, though. Okay, you wait for an instrument to break a major weekly or daily high/low and reverse it. So, right, gold broke down and came back to its weekly lows, and then you buy it. Right. Is that a trade that you really think over the long run, over a 10-year time period, is going to be really successful for you? So I've tested that one. Of course, you could always argue on the edges about what the strategy should be. So, and then in which case that person should learn how to code and show us how to do it. But, well, I've back tested it. I didn't work very well. I was able to make it profitable, but it wasn't that good. Tim Seymour. U.S. Treasury 2-year rates are now higher than they have been for 95% of the last 14 years. Said differently, unless you believe the Fed can't go higher, we are facing a very different backdrop revolving credit. Yeah, that's for sure. The monetary policy regime has changed. We had a decade of lower interest rates and easy money, and it appears clear at this point that that era has ended. What stocks are we looking at here? I'm ready to make money. Yeah, probably should go somewhere else. I don't think we're making money today. What we trade are index futures and treasury futures. So we got on the wrong side of a trade on the treasury. It wasn't too bad. I'm still kind of watching it, kind of thinking maybe I want to do something, but I'm a little torn on what it's going to do from here. The downside move that we had seems kind of excessive and out of nowhere. In the equity indexes, that also seems excessively bullish and out of nowhere. So I don't know, but we may as of yet find a trade. But I don't want anybody to come into the channel and be like, Seth, I follow Seth and I'm gonna make money. That's not how this works. Stay for the entertainment if you enjoy listening to me. I appreciate it. But if I'm making money, I don't necessarily want you guys to know about it or how I'm doing it. Sorry. I was seeing this thing the other day. It's something that I've heard a lot. Especially in discussions of foreign policy, but in trading as well. And that is, you really puff yourself up when you're weak, and when you're strong, you don't want people to think that you're strong, right? That is totally the way that I approach it. It's just like if I'm making millions of dollars a year from trading, I don't want everybody to know about it, because then there'd be like 10,000 people watching the stream trying to mirror my trades and ruining it. Yeah. Gains in the market have been possible since I bought Seth's Trader's Gonna Trade coffee mug. Excellent investment. There you go. Trader's Gonna Trade. It really is a good mug, isn't it? And I can confirm, because it shows me, the purchases. LAFTA did indeed buy it. And you can find the link in the video description below. Touche. Yeah, well, but like the bigger problem here, guys, is you got to realize it, like seriously understand if you're going to trade as a retail trader that this game is not what it used to be and is really heavily rigged against you. And it is incredibly difficult, even in the best of circumstances, for a retail trader to be consistently profitable day trading. It's just, that's just the reality. It doesn't mean that you personally won't make money, but things would, the structure of the market would probably have to change significantly if we were going to change these dismal retail trader failure rates, right? What happened to Win? I don't know. She disappeared for the holidays. She told us what was going on. She hasn't come back. She one of the things was that she was watching from a Chromebook, and I think her Chromebook broke. Right. So she might just not have anything to watch. I miss her. She was a good viewer. Title of the video is 21. Oh yeah, let me up. See, that's exactly the sort of thing that Win would have been on top of and corrected us on. We'll name the video "Interest Rate Bloodbath Continues." Yeah, she was a channel cheerleader. Is there any trader that ranks in your top three? No, I mean, so the place that I was going with that is that, like, if you're a good trader, like a lot of these good traders are like, you just kind of break even, and then 1 month out of the year you do really, really well, and that's where all your profits come from. You know, I did, after doing the taxes, that did come out that I was slightly profitable last year, and it was largely due to like 2 or 3 big trades on the equities side, and um in one short period. You mean to tell me the $100 to $100,000 in 1 week trading stock crypto videos on YouTube every day are bullshit? Yeah. Dude, you know what's something that drives me crazy? The clickbait on YouTube. So you go and you watch the channel makers. All these guys are like, here's what you got to do to make your YouTube channel successful and bigger and this and that. And they say you should use clickbait. And they're like, well, clickbait is okay as long as your video delivers on what's in the title. And I'm like, doesn't that make it not clickbait? Really what you're saying is you should use titles that really try to overexcite people's emotions. Right? So let me show you an example here. This is the one that drives me crazy. Let me come here to YouTube. Okay. So when you come over to Graham Stephan's YouTube channel, look at the freaking titles. It's over. Crash. Prepare. The changing world order has begun. The end. It's just like, come fucking on, dude. And when you watch his videos, they're always like, well, you should just stay long in S&P 500 index funds. Okay, so it really is, it's clickbait. I really feel like, yeah, you're gonna get viewers with that, but I kind of feel like we're doing people a disservice by manipulating their emotions with thumbnails and video descriptions, Yeah. Um we've talked about warrior trading before. I don't know if I really want to talk about that again right now. I really like I think that Graham has really excellent videos. I don't watch them anymore because his thumbnails have become so clickbaity. Over the last 3 years, nothing has been enough to make me liquidate any of our portfolio, and I'm still beating all the indexes, not massively, but good and oh, really good. Hey, who do you use? So I use Fidelity, and if you go to Fidelity, you can see your Sharpe ratio. What's your Sharpe ratio? Because I'm doing pretty good, especially over the last 3 to 6 months. Like I did not play in on the majority of that rise last spring. My stocks didn't really go, and I'm underinvested. I'm still underinvested, but I've done really well the last 3 months. Just a simple E-Trade account. I'm sure the 120 comes from his courses. Well, he likes to trade a lot of low float stocks, so many people speculate that the source of his profits comes from front running his followers, but they can't really prove that. I have to say, like, here's the thing that drives me crazy about retail trading. Okay, who out there is really giving you real solid information and research that's relevant to your trading? It's me. It's me. Anybody else going to tell you about the square root law of meta order impact? Anybody else going to tell you about how liquidity holes form? These are like proven empirical behaviors that the market exhibits that are extremely relevant to what we're trying to do here, and that nobody in the retail trading industry knows anything about. They talk about price action and moving averages and a whole bunch of other stuff that is basically unproven. It's popular amongst retail traders, and I think that some of these strategies can provide you profits in short run, but there's not really any research to back them up. When was the last time you heard somebody say something like, here was like a win rate, or here's the stats? Because the things that I'm telling you about, like that stuff in that stylized behavior of markets, those are things that are like completely consistent. It's not like, well, they tend to do this thing 52% of the time versus 48% of the time. You know, it's not like that. It's like every time that you see a move like this, it will exhibit the square root law behavior. Consistent. Why doesn't anybody else talk about these things? Nobody talks about these things. And yet, I'm not the top YouTube channel. And there's reasons for that I understand, right? A lot of that is just conscious decisions that I made that I'm not going to participate in certain kinds of behaviors. But isn't that the whole point though? Is like, why isn't the YouTube algorithm recommending the things that are best for people? Instead, they recommend the things that gives them the most engagement and that, quite frankly, are harmful to people. In manipulating your emotions about the stock market, you know, I know it's just a thumbnail, but that does affect people and their perceptions of the stock market. The market sentiment right now is exceptionally negative. Last week, the market sentiment was exceptionally negative. And you look at the last 4 or 5 trading days in the S&P 500, looks pretty good. Anybody that was negative sentiment because of what they were seeing on YouTube or any of that other stuff, right? It was a disservice to them. It was a disservice to them. We've got to get our society to a spot where the things that we're pushing and are popular are the things that are best for people and are best for the society as a whole, because this is a competitive game, man. China's going to eat our lunch if we continue to, just follow clickbait, Seriously. It's the same thing with hustle culture, right? If I came in and I was like, you got to trade and you're going to hustle and we're all going to become millionaires, and it's just all you got to do is outwork your competition, folks. That's all you got to do, right? I'm telling you, hustle culture also is a disservice to you, because what hustle culture leads to, it essentially encourages you to put all of your effort and energy every day into whatever the thing is that you think will make the easiest money for you, and prevents you from taking the hard, long, consistent routes that will lead to you developing hard, marketable skills and making the hard decisions that will lead to financial success in the long run. Yeah, 22 on board for ZN. It sure does look like they're going to have another leg down now at this point, doesn't it? I don't know if I can really get like a super great expectancy, or if there's a really great reward involved in going short here. Another problem is the S&P 500 is just like hanging out up there. I don't know. Just don't like this price, even though I'm much more certain that I don't want to try and reverse this. Warrior was allegedly living on a friend's sofa. Yeah, maybe. Anyways, like you can go and you can learn how to code. Guess what? Like that's something that to really do well takes years of practice. You can learn the basics that you need in a month or two. And you can maybe even get a job after that, but then to truly become good at it, it's years of hard work. And when you do hustle culture, what you're going to do is you're going to burn out. You're going to burn out, and you're not going to ever make it to the point where you really have the skills to really be for the easy success, you know? If I watched that 1986 BBC trading documentary, I'm not sure. Doesn't ring a bell. I've watched a lot of trading documentaries in my day. I'll tell you that. The liquidity is being a little bit more firm on this latest leg down. So there was a bit of a hole. It looks like it's firming up below them. You can see that what is being placed on the book is a lot more now. I remember there was this one trading documentary I watched that was following Mad Dog in Australia, and I thought that was so interesting. There's the ES, takes another run. My microphone fell there. You know, they were saying that the 50 basis point odds in May was like above 70% and then kind of came back. Well, it looks like they're making another push. If they keep trading like this, it's going to be 100% probability soon, right? Now, there's still that big old order at 122.22. Hard to imagine not visiting that at some point. Means we could probably put an order down in there, but I'll wait. Still got an hour left, and we're kind of in the mean reversion time period. S&P 500 did push higher. So if I come back to a chart here on the volume profile, and I look at the ES, like how is that compared to well, okay. So we are breaking out of some of these prices that held the markets back before Ukraine invaded. There's still a pretty big gap here to like above 4,500 and 4,600. Okay. There's the treasuries make another push. Jeez. Do we see? Well, actually, it looks like spreads steepened again. Looks like spreads steepened again. In this area is probably some spots where I could make one tickers. Hmm. It really makes you wonder what's like when the ES moves. Every time that the ES moves up like that, it's like, oh, is there news? Are we just catching something? There's not any news, is there? It's kind of. Is this systematic buying? I don't know. It's kind of. Well, there's the treasury busted through that 23 half and 23 really easily. Jeez. And the orders at 22 pulled itself down. So we missed the boat again. They must be trading this Goldman Sachs Fed hiking 50 basis points in May and June. This is kind of continues to be like there's no way you're ever going to catch a trade unless you market order into it. I've been waiting for a pullback and they're not giving it really. They did provide a pullback at 2.360. I was unsure about it, didn't take it, and now look how much further it went. 2.5 basis points later. Oh, a decent amount of volume trading in the 22 area, though. Yeah, 42.68. That's the kind of move that can lead to some short-term exhaustion. But if they're really trading off of this 250 basis point hikes scenario, probably there's no limit to how far down they can go, right? Because as many orders as come through, I don't think that they're going to they're going to price 100% chance of June when they were at 30% before, right? See, you could probably pull contracts out through here, like there. It's a little risky depending on how tight you want to hold it, though. Like you would have wanted to already be in it. Look at that. They're just going to careen through here, aren't they? Well, that large order that we saw moved, but now it's not there anymore, is it? We are seeing some of the liquidity underneath of us get a little thicker. If they were to go through these 21 and 20 prices, now that sure would be something else. That would start to make it on par with some of the craziest trends we've ever seen. Sounds like the Senate is trying to revive a smaller Build Back Better bill with hearings. Finance panel on prescription drugs, help committee on pre-K/childcare, environment and public works on clean energy in the Senate, aging on in-home care for the elderly. It is a lot trading down here at 21.5. I could probably reverse this for like at least $5. Here, let's do it over here. Not quite. Could have gotten the 1, but not the 2. Stocks open higher after Powell says Fed is ready to be more aggressive. Yeah. Those 2 subcharts on the S, is that part of your add indicator package? Which one are you talking about? You talking about over here? These 2? No, this one is the spread between the Nasdaq and the S&P 500. This one is just R squared. It's built into NinjaTrader. If that's what you're talking about. The main indicators that I'm using are the spreads and the dollar index. A lot of the level 2 ones that I have were really more intended for the robots. Like I use the DOM to look at that stuff for the most part. Oh, and the market depth tape, but that just gives me, it gives me notifications, so I hear it. I don't have to watch that one per se. I don't know, like from watching the way this has moved in the 10-year in the end, I feel silly for being stingy about wanting to cross the spread. Because I could have crossed the spread and made money easily, but I was really worried about crossing like that. Ah, man, really? Okay. Sure. I'll take more risk on this tiny little throwaway scalp to save my ego. It's kind of funny how the volume will just like completely disappear in the treasury sometimes. You see that? It's not moving all of a sudden. I do have a video about the spread candles. Both. I mean, there was one when I originally created it, and then there's my video about all of the indicators together, and I talk about it. Trading S&P futures is the hardest job. Not on days like today. Come on. Egos lives matters. I'm super tempted to go short at 38.5 here for some reason. Like on the micros, I'm really tempted to go short there. They're not going to fill that. I might get lucky and get filled and them not go through me. But if they give it to me, I think I'll just take it off right here and increase, decrease my cost basis by a tick instead. See, yeah, 23.66 trading into 25.5 is not necessarily what I like to see. The question is, I guess, are they going to settle at 22 or at 23.5? Oh, look, they did fill it. Ta-da! I get rid of this one. So that's probably not happening. I think there's a pretty good chance that they'll touch 23.5 and maybe even fill me, but I'm not sure that they can move materially above that. By the way, while I'm thinking about it with the indicators, I just want to remind you guys that I changed it from a monthly subscription to a one-time $100 license. So you can go to speculatorseth.com and you can go and get that license. And of course, if you've never downloaded it before, go and try it, and you get a 2-week trial for it. I am going to change things around a bit. I've been talking to a couple of you guys that have been trying it, and I think I'm a little bit more aware of how you use it. And so I'm going to kind of shift the indicators up a little bit so that they, kind of come out the way that makes more sense. Because right now they're kind of set up for like maximum configurability, but most people don't look into that. They just want to put like the default indicator up, right? So I think I'm going to make a new one and just call it Santa Fe and just have it be the activity levels of the 3 forces. But who knows when I'll get to that. So I've been focused on machine learning lately. I'm concerned a big bank will buy your indicators. Nah. I mean, you think that they're going to come in and offer me $1 million and be like, yeah, okay, we'll get rid of it. You guys can take it and I'll stop selling it. I would totally, you know what? If that ever happened, I don't think that it would happen, but if it ever happened, I would probably say yes. So maybe you do have a reason to be concerned. But no, what we got is kind of okay. So I have something in machine learning that will send information out of NinjaTrader 8 and that you can then import it into Python. Yes. But I haven't taken it any further than that because I have learned how to make machine learning models in Python and stuff, but I haven't quite sorted out, the machine learning model that would be useful for what we're trying to do. And I don't completely understand Keras yet. I think that I'm going to put it into a neural network, but I'm worried that if we do a neural network, that it's probably just going to overfit, right? Probably more than you're so kind, Jan. To be honest with I actually does kind of make you wonder, like, these are things that I feel really strongly should just be built into NinjaTrader. I really do. I really think that they should be default indicators. Like if NinjaTrader came in and implemented a spread indicator built into NinjaTrader, implemented a synthetic dollar or just like a synthetic instrument into NinjaTrader, I'd be all over it. I wouldn't be mad at all because I feel like everybody should use them. And that is why I priced it the way that I did. Because I could probably, with the amount of stuff that I have in there, granted, I prefer to look at the DOM, but those level 2 indicators are useful and they do filter things in different ways. And I made it for machine learning, right? But there's some cool stuff in there, and the inventory cost basis is really useful. I still use that, and I find that really useful, especially like the real use case for that one is you're in the S&P 500 and some headline comes out that immediately causes everybody to close their positions, and it immediately falls down. That indicator will tell you almost exactly where it's going to stop. Every time it goes right to that line. So that's useful. Yeah, I could probably sell it for a lot more, but I want everybody to have those spread and synthetic dollars and everything else. So I set a price that barely compensated me for the time that I put into it and allows me to, expand and hopefully be able to put more resources into it in the future, but still low enough that everybody can have it. So it's only $100. You can get it at speculatorset.com. Is there a way to make a connector between? Yeah, that's what I did. So the way that it works is I'm using a socket, essentially. I'm using a socket. It's actually out there. Somebody posted on the NinjaTrader 8 forums the base. I had to modify it a little bit, but yeah, it sends data out. So, but I've picked up a new book that I think will show me more concrete examples of using machine learning for finance applications. I think I could create a neural network here at this point and get it to work. I would be hard for me to find the forum thread at the moment. It's out there though. If you just search for NinjaTrader TensorFlow and look for posts on the NinjaTrader forum, you'll find it. Visual on your level 2 is way more useful than on the DOM. Way better. Well, I appreciate it, Jam. It actually kind of is. The thing that I think is really interesting is especially those indicators I have that show you like the balance between buyers and sellers and like filtering out the stacking and pulling. You can kind of see it flip, and you will see like price movements change when those flips happen. I've tried trading off of the flips and it doesn't seem to really work because it's inconsistent how it does it, but you'll always see some sort of strange aberration on that chart when it moves. So it's really interesting. I think that here again, there's probably a hidden Markov model that we could put on top of that would make it really effective. Okay. 23 finally goes bid, huh? They're not trading very much into 23.5 though, as we were concerned about, right? Cool. All right. So I made it out without too much drama on that one, although it did take 13 minutes. 13 minutes for 3 ticks. Can you believe that? Wait. Can you believe we had a move down that was 18 ticks down in the treasury. Then we pulled back 7 ticks, and then we moved down another 13 ticks. And then here we've been sitting here for almost 15 minutes and we only got 3. Can you effing believe that? But why does this happen? We know why this happens, right? Because by the time that you're certain that there's trend in there, the liquidity hole forms and you'll get stuck in the liquidity hole. In this instance, the reason that I took that trade was because I knew where the liquidity hole was, and I knew that I was likely to be able to catch both sides of it. Took a lot longer than what I should than what it should have. What data level is required? It uses market depth updates. So if you're getting your regular level 2, then it all works. And you know, I prefer rhythmic where you get like all the levels, but it works okay with only 10 levels too, especially in the treasury. I find it very curious that yesterday the whole Powell drama really hammered both treasuries and the market. And here today, treasuries continue to get battered, but the market is like, it's fine. Let's buy now. Right? Let's see if there's something here on Zero Hedge. Hungary scrambles fighter jets after plane violates airspace from Ukraine. Rabobank, we are seeing a struggle for a new world order. Yeah. Rogan exposes how the West has done a complete 180 on quote-unquote corrupt Ukraine. Well, but not exactly, because the whole thing is that Zelensky really was able to turn things around to some extent. One bank warns we are about to witness a historic short squeeze eruption in oil. JP Morgan trading desk hints Zelensky is close to capitulation. Not anything about Federal Reserve or any kind of headlines that would maybe be moving us. Probably the most likely one is, again, Goldman calling for 2 double hikes. Shall we go and check and see what they're pricing in at the moment? If I'm going to go short, I'm going to need to get more like 375 or 37. Fed Watch. Okay, so for May. Oh, wait, really? They say that in May, there's a 66%. So it's actually less. It was 70%. And now it's 66%. Hey, NASDAQ killer, how you been? Is there one trader in futures that stands out to me? Not really. I honestly, when I look at like the other people that are here doing this, I think they were all kind of in the same boat. You know, futures trading is really hard for a retail trader. I'm sure that there are some futures traders out there that are really amazing that we're never going to hear about, right? That work at a bank and is never going to get any kind of public recognition. That's the way. Oh, you just came back from work. Oh, you've been working a little bit later then, huh? That's weird. It's only 66% because I'm expecting that to go up to more like 80%. So that just kind of gives you an idea of how there could be more room to the downside here in the Treasury. Okay. And then when we come into June, the 150 to 175 is actually a lot less than it was. What's with that? When I took the picture yesterday, that was, let me show you the picture yesterday. Was the tool lying to me? Here it is, June 2022. June 2022. 100 to 125. Oh, actually it is different. Whoa, it's crazy different. Nobody's saying that they're saying that there's gonna be 3 rate hikes. Nobody thinks that there's only gonna be 25 and 25. Nobody thinks that. Now it's gone from 36% to 64% saying that they're gonna do 2 hikes in a row. But it's curious to me that that's only 66. That's okay. But what about beyond that? What is 150 to 175? Most of them there. There's actually even some people saying that they'll do 3 rate hikes in a row. Wait, so if we really come out here, so like if we come to the end of the year, how many people think that we'll be up to 3? Wow. It's curious. I actually would think that the distribution would be a little bit closer to that 200 to 225. They heading back down again without me. Still, I'm just not getting, I'm being too picky, aren't I? I would have expected it to be more like this, but whatever. He is a little low. This is Bostic right there. The rest of the committee is more like that, so. Do we have access to the short positions intraday? Not that I know of. I've never heard of such a thing. No, they didn't move without me. They're just kind of chilling in that area again. Wow. During her Senate confirmation hearing, Judge Jackson criticizes congressional statutes and the sentencing guidelines, saying the guidelines are not up to date and are too harsh for child porn offenders. I'm really surprised she said that in her Senate hearing. That could stop her nomination. Forcefully pushes, but though Hill presents it as Jackson forcefully pushes back against GOP child porn sentencing attacks. Dude, this is a really bizarre Hill. That's a hill to die on. Okay. But she's not talking about child porn offenders. She's talking about child sex abuse victims in her answer. Dude, that's gonna be a problem. So something that the Republicans could do here is refuse to the Senate, the Republicans on the Senate Judiciary Committee could refuse to attend the hearings when they do the vote, preventing a vote. At least one Republican has to show up for them to pass the vote, which would be really bad. Like, I don't know what would happen. I think that Biden would refuse to nominate somebody else. And then can you really go 2 years without filling the position and then Republicans are in charge and they fill the position? Then Democrats would be really, really mad about the whole, stacking the court and stuff like that. But now I think we should come in. I'm still not, now that it's a 3.375. The volume has kind of changed here. It's really slowed down. I feel strongly that we've seen the worst of the downside action. That doesn't mean that we won't see another drop to new lows today, but rather I think that the bulk of the volume has come through. So I don't know if I really want to look for short anymore in the treasury. It's 8:32. That's also a little bit late. Let's just keep monitoring it. I may still take a trade today, although it might have to be after the stream. The epic crash in fear, says the marketeer. Yeah, I bet. There's 24.5. So remember I was saying it's remains to be seen whether they can hold much above 23.5. Well, like look at 24.5. They were able to trade up with only 484. And you saw a little bit more extreme of an up move in the ZB. It's flattening. It's flattening back out on the far end of the curve, essentially. So with all of this, yes, they did. when the treasuries moved lower, I didn't notice that gold fell down. I wonder if our Reddit troll will acquiesce. So if gold has an epic failure here, okay, we should just not say anything to him, right? We should just ignore him and hope that he forgets about it. I want to be mean to the guy. It seems like he's probably a narcissist, right? So we don't want to upset him even more. Have you ever had access? No, I have not. I wish. That'd be awesome. No Bloomberg terminal for me. Tell you what, big banks, if you promise that you'll let me have a Bloomberg terminal, I'll come back and work for you. That's interesting. The 10 and the 30 got smacked back down there, but not the 5. I don't know about this. There's ES above 4,500. This rally in the ES is really something else. When you say, I did not see this coming at all. And surely the treasuries have to be selling to some extent because of that. But man. Bloomberg don't give you a big advantage without flows of clients. I think that you could probably make what you put into it back by trading breaking news in individual stocks. Maybe having the interest rates might help you a little bit, but you are correct in that the advantage that a lot of institutional traders have is that they can see the institutional flow. Yeah. That makes a big difference. And a lot of these guys, without that flow, they're not successful. In fact, most of them. Which really here, just again, it just comes back to this thing. Like the game that we are playing is different from the game that all of the institutional players play. That's why when you look at the research and things like that, it never seems directly applicable to day trading. There is use for it to day trading, but you're going to have to come up with it. You're going to have to sort that out, right? But they're more interested in the institutional use cases of it. So it's a different game, and the game that we're trying to play is not a very favorable one. Just to be just blunt with you, it's not very favorable. You know, the one that when we hear about people making money in the stock market trading in the 80s and 90s and stuff, they were playing a different game too. They were playing, market maker, which has basically been completely dominated by the robots now. One of them is a quant at a bank, and he says his day-to-day is only watching one symbol with a team of 5. That's interesting. For sure. But if he's a quant, why wouldn't he be, developing the software and trying to improve the model? What do you think? The treasury's pretty slow now, right? I think who we really need to talk to are the hedge funds, right? Like, if somebody was willing to give us the secrets to Renaissance technologies, which would never happen, and I wouldn't ask anybody to do that, but that's probably the kind of information that we would really want to have to trade off of. I haven't done anything with social sentiment other than just kind of watching it myself and trying to sort it out. I haven't done anything quantitative with it. Yeah, I would like to talk to some hedge funds and kind of look at some of the things that they do. But here again, I think that most of the hedge funds are kind of probably doing more of a swing strategy sort of thing. The CTAs are definitely doing more of a swing strategy. But there are some people out there like Renaissance Technologies. It sounds like that they started with finding statistical inefficiencies in futures markets. So hmm. It does kind of look like that the liquidity is healed to some extent, and they're a little bit more free flowing, but the liquidity is quite a bit more firm now, and there's just not as much market orders coming through. So I don't know if that really that kind of suggests that the best movement is over. Big guys are always getting the first call from the brokers. Well, I hope that you're not talking about Russia today with that RT thing. Well, remember there's the whole block trading scandal, but there are firms out there that specialize in block trading and being the counterparty to block trades. There is, but it's just once you really understand the market and the way it is, I really think that there's two really solid ways to make money. One is be informed, two is be a market maker. And I just don't think you can compete with the robots to be market maker in the vast majority of markets today. If you can find a small instrument that fits the qualifications and doesn't have competition, then go for it. But it's not the treasury market, I tell you that. Oh, I think Renaissance Technologies has an edge. Yes, I do. Yes, I do. I think that they've found a statistical inefficiency that is probably very, very sophisticated. Do you think the edge is when they push around? No, I think the edge is that they're at the front of the queue.
Come on. They're already late.
Bad boy. Why won't you just get in the car seat, huh? Huh? Mm-hmm. I've been playing Minecraft lately, and I feel like that all of the sounds in the game were made for this child. But the one that I really hate is those freaking judgmental villagers. They're always looking at everything you're doing. Like that what you're doing is bad or immoral. But then they all work in my factory, so what's up? Yeah, lots of market makers show a market between correlated assets. Exactly. So you got to be fast. Like, that's why I was saying, like, it's pretty hard, if not impossible, to compete on that plane. S&P 500 is still just going and going and going. Is he a big good looking? Again, why? I'm not gonna take the binky from you, but I would prefer that we don't have binkies. No, you're too old for them now. and I want you to say things. I want you to talk. 3,000 offer 25 ticked up. 5-year, kind of dragging them. The 10-year kind of holding back a little bit. Feds Williams, I am excited about the innovation in stable coins. Oh boy. Bitcoin's gonna like that. Well, to be honest with you, the idea of a central bank digital currency kind of excites me too. I know that there's a lot of scary dystopian possibilities with it, but there's also a lot of exciting possibilities with it, especially in the data science. You know, if we have a stable coin that is the whole US economy and we can literally do analysis on every transaction that's done in the economy to make our economic predictions, like that that would be so interesting, right? Mhm. It would be though. Dude, I'm okay. So now from the Jackson hearings, no reason to believe Supreme Court captured by dark money groups. The CIA would love that. Yeah. Well, I think that any kind of a stable coin that is used by the US would have to have privacy, right? Would have to be a situation where in order for the government to see anything into it, they would need to have a warrant and seize the wallet. And then once they have the keys, then they would be able to see the transactions, right? Other cryptocurrencies have fatal flaws, says Feds Williams. Deputy NSA for Cyber and Nuremberger. Okay, so this is an important one, but listen to this. The Russian government is exploring options for potential cyber attacks on critical infrastructure in the United States. To be clear, there is no certainty there will be a cyber incident on critical infrastructure. So there has been a lot of talk in the past few days about Russian cyber attacks, and I would be cognizant of that and looking. I think that cybersecurity companies are probably going to continue to do well. Like cybersecurity is probably the next big market, bull market. Okay, so that was a pretty good move there. I think that I don't know. Guys. Sometimes it seems like no matter what you do, it won't cooperate with you, right? Good content today. Hey, thank you very much. Yeah, I wish the trading was better, but yeah, what you gonna do? They may, as of yet, come back. Actually, it kind of looks like the 30-year might be coming back a little bit. Like I said, it's kind of difficult because I feel like that this move was a little bit too aggressive and all that. But then I look at, they're trying to price in double rate increases because Goldman Sachs is calling for it. There's probably no limit to the downside here. Wouldn't surprise me to see them do something like, this is kind of a crazy scenario, but like I'm just kind of saying within the realm of possibilities with the liquidity and everything, you could see something where it's like they come all the way back to the open and then they breach a new low later in the day. That's totally within range of possibilities. And the camera's right there. See right there? Right there. He's being autistic. Do not touch that mouse. Do not touch that mouse. No, no. No, no. It is armed. It is armed and dangerous. So don't touch it. Wow, Kroger grocery workers moving towards a strike in Southern California. It reminds me, in Kansas, there was this store called Hy-Vee, I think, that was employee owned. And nobody shopped there because it was too expensive. It was more expensive, let's say. Well, they're coming back up to the seller's cost basis in some instruments, so it might be at a spot where they might have trouble. If this isn't going to be, lumber went limit down. Oh, that's good. Maybe I can finally build my garden boxes outside. No, if there's like a roof on this thing, and they're going to visit to the downside, you're likely going to see it somewhere around here at 28.5. 30, they're already there. Well, in VWAP, it's kind of between the VWAP and the seller cost basis at 28. So we'll see what happens. I don't think we're going to be around for it. She is like, they're super late because they usually leave at like 8:35. Yeah. There they step up again at 26. They're not doing the VWAP bounce, that's for sure. Thank you. Enjoyed it. Have fun. No, I can hear the puppy crying. Let me out. Let me out. Well, he was warm, and now I feel cold. The S&P 500 is, well, I don't know. I would say it's slowed down here at 4,500. It's rare that I've ever seen them come up to like a 4,500 level and then just like chill and close there. It's usually like there's a push beyond that too. So I think there's probably some movement still to come, but these instruments are kind of doing like for instance the 10-year. Well, they just got smacked down there, but for instance in the 10-year, we've had this move up. The volume has largely been flat. So this is the post meta order impact. Well, somebody just smacked it down 3 ticks. So I don't know. Maybe there's going to be another leg to this meta order after all. It could just continue going and going and going and going for all we know. But I think that what we just saw was post meta order impact, right? Because it's just kind of gotten quiet. And that's kind of what you're seeing in ES too. So maybe more activity later in the day, but I think that we're probably at a note. Well, okay. I was going to say maybe we're at an okay spot to end the stream, but maybe they're going to keep going. Okay. Well, some buyers fought back at 24 there. So kind of curious because remember we were like, well, I don't know, 23 is kind of the spot. Well, they did get quite a bit above that, but now they're feeling back down towards it. The Hill. New book reveals frustrations between Biden and Harris camps. Yeah, because Harris is a incompetent nitwit. Sorry, but I think it's pretty clear to everybody at this point that she would be a bad president. I think this is like the one issue that seems to unite liberals and conservatives right now is that Kamala Harris sucks. So with that, I will end the stream now. I don't know. Hey guys. It kind of looks like we could continue to have volatility through this week, at least in the treasury side of the market. The equities are doing really, really well, and so I'm not exactly sure where they're headed completely, but the way that they're moving is going to put a cap on liquidity. Yeah, the puppy. We moved the cage outside. Because he always wants to come out of the room, and it bothers me when I'm trying to work and he's whining. But my wife has moved him into a pretty big playpen. I mean, it's a pretty big, but it's caged off, both to protect him from the baby and to prevent him from being on the floor. Because what will happen is he'll kind of wander off a little bit and we lose track of him. And we really want to house train him better, so. You think World War can start? I think that World War III started 2 years ago, to be honest with you. It's just that World War III is not a conventional war. It's an economic, technological, and propaganda war. I hope that we never see a war of the type of World War II. I really think that the Russians are the only ones dumb enough to do something like that right now. And you can kind of see the consequences of it, like in Mariupol, where they're literally just leveling that city, man. It's just sad. And the way the Russians are acting, I really think this is not the actions of somebody that wants to come in and take over the country and then rule it in peace and safety. No, like this is like a genocide, man. They want to kill everybody there and then move the Russians over. Like, it's scary what's going on. And I think at some point, well, I mean, the world will not stand for it. I hope that it doesn't rise to direct conventional warfare confrontations, but more of a Cold War, I guess. Yeah, but it's not going to be a Cold War. It's going to be the first war of the information age. That's what it's going to be. Just like InfoWars predicted that we are in InfoWars, yeah. So for that, a lot of the stuff that they say is just nonsense, but I digress. Hey, I should shut up and go. Have a good day. I'll see you tomorrow. In the meantime, stay profitable, friends.